Hey, this is JR St. Julien with the St. Julien Real Estate Group. Welcome to my January 2023 San Diego housing market update and a market recap for 2022. So as you know, if you've been following my videos, the big driver of this market has been inflation. As inflation has gone up, the interest rates have gone up, the Fed has been raising their federal funds rate, and the mortgage interest rate have followed, or actually probably led, based on what they expected the Fed to do. And as a result, we saw a slowdown in demand and fewer homes starting to sell. Now, that being said, let's give a quick recap of 2022 so you know what happened last year, and then we can talk about where we are this year and try to make sense of the current situation. So last year, the median home price was flat. If you look from December of 2021 to December of 2022, it was literally flat. If you look from January of 2022 to December of 2022, we saw the median home price go down 0.6%. So for the most part, flat. Simultaneously, during that time frame, we saw the time on market steadily increase to where in December of 22, we hit an average days on market of 38 days on market. So that was definitely a high for the year. But simultaneously, we saw the number of new listings come to market start to drift off, and they pretty much decreased all year to where in December of 2022, we saw new listings down 41% from the prior year, and we saw closings down just about 49% from the prior year. So again, we had a mix of things happening during the year. We had lower inventory, higher interest rates causing lower demand, and those things coming together to cause a whole lot of confusion. In the end, 2022 was pretty much a wash. You didn't really make any money, didn't really lose any money in 2022 if you held your property the entire year. Now, we did see peaks and valleys in 2022. So like I mentioned, in April and May, we hit a peak on that median home price, and since then we've come down 12.6%. And we've seen interest rates peak. We saw the peak of interest rates into the low sevens right around that November time frame. And if you look at this interest rate chart, you'll get an idea of what the interest rates actually did throughout the year. Now, this is a chart of showing the 30-year fixed rate on average across the country. And you can see we peaked in November, and then we've been trending down for the most part since. You saw a momentary uptick in January of this year, which was right before we got the new inflation numbers for December. That was better than expected. Inflation went from 7.1% in November down to 6.5% in December, which was very favorable for the economy and a very favorable sign that the Fed is looking for to determine how they continue to proceed with their interest rate hikes going forward. Now, as a result of those numbers, you see the mortgage rates immediately responded, and most economists are expecting them to do a quarter-point basis rate hike when they meet later this week, which is, again, favorable because this will be the lowest rate hike that they've done since they started raising rates last year. So all of that being said, how is that affecting the market this year? Well, I can tell you right now, we're starting to see an increase in activity, which is normal for the month of January. We do expect to see activity increase as we come out of the holiday season, and we're definitely seeing that. Open houses are very busy right now, so that's showing a lot of signs of future increased activity is kind of what we're starting to expect as we start to move into the spring. We're seeing interest rates on the decline, at least trending downward, not aggressively. And honestly, a slower move is better for the market because now people are finally starting to adjust to these new rates. We're sitting right around the 6% mark today. And most likely as we get toward the middle of the year, we'll start to see those rates come down into the 5% range. Now, that being said, we're also seeing months of inventory sitting at 1.2 months of inventory. Now, this is the lowest number that we've seen since that peak back in May. In May, we were sitting at 1.1 months of inventory, and that number has continuously risen to get up to about 1.8 months of inventory. And then all of a sudden, we took a nosedive and we're back down to 1.2 months of inventory. So that's also showing signs that, hey, some buyers are coming back into the market. They're taking advantage of these slightly lower interest rates, and demand is still sitting ready to go for the right house to come onto the market. Now, that being said, sometimes it's a little bit harder to find the right house because while all of this stuff has been going on, we've also seen the inventory continuing to stay low and the new listings that are coming on market to continue to drift down. As of December 22, new listings that are coming on market are down 41% year over year. So again, we're having this weird conundrum where demand is lower, but inventory is much lower. Now, interest rates are starting to tweak down a little bit. Demand is starting to go up a little bit, and we're back in an extremely low inventory environment where we only have 1.2 months of inventory on the market. So what does that mean? Well, that means that, hey, if you're thinking about selling a property, it may be time. If it's the right time for you, I wouldn't not sell if it makes sense for your personal situation because there are fewer homes on the market to compete against. As long as you prepare properly for this market, you make it in a condition that's ready for this market, you price it, you present it appropriately, then you likely do well when you go to sell your home. Now, on the flip side, if you're thinking about buying a property, as I've been saying over the last few months, This is now an environment where all buyers can participate in the market. Over the last few years, that was not the case. If you were a new home buyer, a VA buyer, a FHA buyer, someone that's coming in with a low down payment, you couldn't buy a home because the market was too competitive. So if you've been sitting on the sidelines thinking about, I want to buy a home, but I'm worried about rates, I'm worried where the market's going, this is the opportunity, because as these rates continue to come down, which I do believe they will continue to come down, and all signs are currently showing that the Fed is finally getting a better handle on the inflation situation. So once that happens, the mortgage rates will respond accordingly, likely trickle down a little bit, and that likely scenario will cause more buyers that were sitting on the sidelines to come back into this market. And honestly, we're already starting to see that right now this month, in the month of January of 2023. Now, it's not a massive push, but if those rates drop 1% or have some form of an aggressive rate drop, I guarantee you will see an influx of buyers coming into the market. And with the low inventory of the homes that we have to sell to those buyers, you're going to see competition spike exponentially. So if you've been sitting on the sidelines, I would encourage you to get off the sidelines, because now is the time. Now you have that window of opportunity where you can take advantage of those price drops that we've seen from the peak back in May, as well as slightly lower interest rates. And then once the interest rates come down even further, you can go ahead and refinance that property and lock in that new rate in a year or so from now. Remember, marry the house, date the rate. The rates will not always be at this level. That being said, I'm not predicting that they're going to come down to that 2.5%, 3% range that we saw for a while. I think those rates are gone for the moment. So you need to kind of adjust to the new normal. Right now, we're sitting right around 6%. I see rates in the 5% range as highly likely as we get a better handle on inflation and move forward through this year. So again, if you have any questions about anything I'm talking about, you don't understand what I'm talking about, or you just want to talk about your personal situation, I love to talk real estate, and I would love to chat with you. Click on my Calendly link, either in my bio, if you're following this on Instagram, or down below if you're following me on YouTube, and book an appointment with me. I love to talk. No obligation, no cost. It's just a conversation. I would love to chat with you about your particular situation and answer any questions you may have. So again, I'm J.R. St. Julien with the St. Julien Real Estate Group of EXP Realty, and I love to talk real estate. Talk to you soon.